Hi, this is Bob Gersh with East Coast Capital, and today's topic is the main reason mortgage rates are so high. The main reason mortgage rates are so high. Today's mortgage rates are top of mind for many homebuyers right now. As a result, if you're thinking about buying for the first time or selling your current house to move into a home that better fits your needs, you may be asking yourself these two questions. Why are mortgage rates so high? When will rates go back down? Here's context you need to answer those questions. Why are mortgage rates so high? The 30-year fixed rate mortgage is largely influenced by the supply and demand for mortgage-backed securities. According to Investopedia, mortgage-backed securities are investments and products similar to bonds. Each mortgage-backed security consists of a bundle of home loans and other real estate debt bought from the banks that issued them. The investor who buys a mortgage-backed security is essentially lending money to home buyers. Demand for mortgage-backed securities helps determine the spread between the 10-year Treasury yield and the 30-year fixed mortgage rate. Historically, the average spread between the two is 1.72%. For 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury yield. Last Friday morning, the mortgage rate was 6.85%. That means the spread was 3.2%, which is almost 1.5% over the norm. If the spread was at its historic average, mortgage rates would be 5.37%, 3.65% Treasury yield plus 1.72 spread. Why are mortgage rates so high? Today, if they were normal spreads, the mortgage rates would be 5.37%. The actual rate Friday, June 2nd, was a mortgage rate of 6.85. This large spread is very unusual. As George Ratiu, chief economist at Keeping Current Matters, explains, the only times the spread approached or exceeded 300 basis points were during periods of high inflation or economic volatility, like those seen in the early 1980s or the great financial crisis of 2008 and 2009. Historical data to help illustrate this point shows the few times the spread has increased to 300 basis points or more. 1971 to 2023, average spread was 1.72%. 1989 to 2019, average spread was 1.66%. 2020 to 2023, the average spread was 2.12%. In 2023, the average spread was 2.78%. The spread has come down after each peak. The good news is that means there's room for mortgage rates to improve today. So what's causing the largest spread and making the mortgage rate so high today? The demand for mortgage-backed securities is heavily influenced by the risks associated with investing in them. Today, the risk is impacted by broader market conditions like inflation and fear of potential recession. The Fed's interest rate hikes to try to bring down inflation, headlines to create unnecessary negative narrative about home prices, and more. Simply put, when there's less risk, demand for mortgage-backed securities is high, so mortgage rates will be lower. On the other hand, if there's more risk with mortgage-backed securities, demand for mortgage-backed securities will be low, and we'll see higher mortgage rates as a result. Currently, demand for mortgage-backed securities is low, so mortgage rates are high. When will rates go back down? Odeta Kushi, Deputy Chief Economist at First American, answers a question in a recent blog. It's reasonable to assume that the spread and therefore the mortgage rates will retreat in the second half of the year if the Fed takes its foot off the monetary tightening pedal and provides investors with more certainty. However, it's unlikely that the spread will return to its historic average of 170 basis points, so some risks are here to stay. The bottom line, the spread will shrink when the fear investors feel is eased. That means we should see the mortgage rates moderate as the year goes on. However, when it comes to forecasting mortgage rates, No one can know for sure exactly what will happen. This is Bob Gersh with East Coast Capital. We do this blog, video, and podcast Monday through Friday at AskBobGersh.com. If you'd like to connect with me, the best way is to go to AskBobGersh.com. If you do see me at the local coffee shop, tap me in the shoulder. Let's sit down, have coffee, and talk about whatever you like to talk about. Have a great rest of the day, great rest of the week. Enjoy life. And if I can be of any service, just reach out to me through AskBobGersh.com. Until next time, thank you.